Hey, it's Tim. It's about 9:30. We're about to open up, and what a difference a couple of days make. We're seeing the data that's coming out of the macro around the world suddenly is very disappointing, especially from the places that have had very good data. So forget Cisco's outlook, very tempered yesterday, and forget even some of the earnings that we've had over the last couple of days. I mean, the Eurozone industrial production number came in at minus a tenth of a percent versus expected 0.6 up. Australian unemployment up 0.2%. Again, this is matching their 2010 high. This is one of the few economies that has been chugging along with the recent commodity strength. And you have India's June industrial production coming in at 7.1 versus 8.1 expected. You've got a number of other things. The Portland Cement Association is now expecting U.S. construction to decline somewhere 7.3% in 2010. This is a forecast that's revised downward. And certainly when we look at cement stocks, we're looking at the guys that are most exposed operationally to any type of a recovery. They don't see this recovering before 2011. We have in the site a bit of a call on Cemex that's worth taking a look at. But at the end of the day, the data is disappointing, and it's a bit of an adjustment, I'd say, in the view here is that things are getting a little worse. The technical call on the S&P now is also being revised downward by a number of the global strategists. Just reading Bank of America's move to effectively call a 950 to 1,000 bottom here on this move for the S&P. Don't know if that's where we go, but it's certainly part of the revised approach to where we are. The one part of the trade today that's kind of interesting is I think on the currency side where things are not as beaten up as you'd expect, even though the dollar index is continuing to track lower. The dollar yen went to 15-year lows. You've got 15-month lows. Excuse me. You've got a number of other significant crosses that at least are following the same trend but not falling apart. But the Dixie's up about 15 pips this morning, and I don't see anything that takes us away from that. The price action has been also relatively contained. In fact, Europe was up a bit this morning, but a lot of this is turning over as we open in the States. Jobless claims also in the States were quite negative. So on the watch side, GDP tomorrow out in Germany, any weakness there I think will begin to start to stretch at the fabric of all the CDS and the sovereign credit fears and some things that actually had been sidelined for the last couple of days. So continue to watch those.